AI is like a junior analyst.
I was going to say it's like having a team of analysts or something doing the pre-work for you.
It's sort of like you got a grad. So it'll be interesting how that moves forward the next few years.
Well, that's the next big productivity uplift, people hope, yeah. And everything's in play.
Yeah.
Politics, economics, markets, wars actually, and that of shifting oil prices around. So everything's in play. The inflation data and the labour market data will pretty much tell you what you need to know, mostly. And a lot of other things just help feed into that, I think. The world is awash with data, but I think in the end, those two are the key.
As an economist, I'm sure you've made the wrong call. It's part of your job.
I've made so many wrong calls.
Is there anything sort of other than the wrong call?
Well, I'll give you one example of a wrong call because I thought you might ask me that question on the way in.
Private markets investments are investors can find some real value. I find the best way to learn is learn from someone who's done it before and given it a go. Hi, I'm Travis Miller, host of Grow Your Wealth podcast. Thanks for joining me here today. On these podcast sessions, we're going to talk through how certain investors have navigated the bumpy road of investing, whether it be through business or investments in general. Thanks for listening today. Welcome back to the Grow Your Wealth podcast, where we bring you the insightful conversations with industry leaders to help you navigate the world of finance and investments. I'm your host, Travis Miller, and today we have a very special guest joining us, Peter Jolly. Today we'll explore Peter's extensive career from the beginnings at a university in New Zealand, where he dabbled in agricultural science, to his true calling in economics. He has spent most of his career immersed in the world of finance and research, focusing on market trends, economic issues, and everything in between. Just a few years ago, he furthered his expertise with a focus on sustainable finance at Columbia University in New York. We'll also explore some of the key lessons he's learned along the way. So without further ado, let's drive in that conversation with Peter. Thanks for coming on, Peter.
Morning, Travis. Thanks for having me.
No worries. How about we start at the beginning? Give us a summary of who you are and what you're currently focused on.
Who am I? Kiwi boy, originally, and
whereabouts in New Zealand?
I grew up down around in Central Otago, just out of Queenstown. My mum's still there, my brother's still there, so that's our family origins. Lovely place if everyone wants to go. Best place to go.
White wine, isn't it?
Yeah, actually Pinots and skiing and all sorts of stuff. Yeah, and then through a series of, I don't know how detailed you want it, but through a series of kind of moves, school, university, found our way to. Sydney eventually, but there was a few years in between there.
Where did you go to uni?
So my first uni was, I went to, I like a lot of people in my generation, I was the first one to go from both lines actually of family. And so I just followed, didn't think about it too hard and ended up going to an agricultural college, even though I had no background in that at all actually, just out of Christchurch. Yep. And that was what Joe was, the agricultural science and various other things. I worked out, I had a lot of fun there, Gotcha. Skiing and rugby and various other things. Gotcha.
That's what uni's about, right? Getting a bit of balance.
It is. Too much balance possibly. Yeah. But it was good. And then I still have very lifelong friends from that period actually. But I worked out pretty quickly that, one of the things you do work out is often what you don't want to do,
Sure.
And I worked out strangely that I didn't want to work in the field I was studying.
Gotcha.
Anyway, through a variety of moves and false moves, I tell you what I was working through when I first got a job, I was working for a small finance company in Wellington.
Yep.
And we had a presentation from this guy who I've never heard of what an economist was, but this guy, Gareth Morgan, actually became a reasonably big economist in New Zealand. He came in and I went, wow, that's a cool job. Just talking about politics and economics and stuff. Real. So I was always very interested in that. So I went.
And you studied in between this? So just straight out of your ag degree effectively?
Yeah, and I ended up in a company and then I went, that's pretty neat. And so I ended up studying economics in London.
Wow.
I had to do a bit of postgrad diploma and then I went to the University of London and found my way back to the central.
How did you get from New Zealand to London? You just jumped on a plane. My girlfriend and now wife at the time, she was there, and it was a bit of a Kiwi thing to go to London and Australia or London, and London was better.
yeah. Actually, everyone went to London for some reason at times. Yeah,
Gotcha.
And so I studied and and got my, I had to cross over and I got my degree. It's one of those funny things. There's the tall poppy, whatever. I came back from London with a master's degree, a 1 year taught master's. To be honest, I hadn't studied that much economics in it. Gotcha. People treated my degree better than someone who's done 4 or 5 years of honours in New Zealand. It's a strange thing. There's an inversion about how people perceive our local degrees versus the overseas ones.
Yeah, so I agree. Like when you just said to me you did an economics degree in London, I immediately think that's pretty impressive.
Exactly.
And so, that'd look good on the CV.
I tell my kids it's a very good little arb out there actually. If you can do your whatever your business degree or master's degree, at a very good school, I mean, or particularly something overseas, it's perceived as better. For sure. Whether it's better or not, I don't think it's true necessarily, but I mean, certainly
perception's pretty important.
Yeah. And then I ended up working at the Reserve Bank in New Zealand. So
gotcha.
that's what. Yeah.
So how'd you get that job? So you basically did the economics. So you'd done ag science into economics because you sort of thought you're interested in it personally.
Yeah.
And then you've gone back to New Zealand and you've landed a gig at the local.
Had to go back, but we're going back to New Zealand because our first son was about to be born, and I applied for a bunch of things. I applied to the Reserve Bank actually when I was overseas, and they employed me amazingly when I was overseas, then turned back up, and there was a really, if you know that history, I mean, about the central bank in New Zealand was like a bit of a trailblazer actually, in terms of being the first central bank to be truly independent, being given this very narrow target. It's now the orthodoxy about how people set up their central banks.
So this is an inflation target?
Inflation. They were the first central bank to introduce inflation targeting, and it's a single goal. I mean, so it was. I learned a lot. I ended up finding my way into the markets area as well. Like, I mean, that's probably where I ended up. So the helping out in all the kind of day-to-day, money market kind of operations and various other things. So it was a good place.
Because a lot of economists have spent time in reserve banks, right? Like obviously in or Treasury, both in Australia and New Zealand, which is sort of my knowledge base.
Yeah.
Sounds like it's a pretty good starting point to kick off your career.
It's such a common starting point, actually. Yeah. You're either in, as you say, Treasury or the Reserve Bank. And I think the answer to that is actually you get a lot, they employ a lot of people like you, like those economists, and there's a lot of training. So, I mean, you go, like everything, university gets you somewhere, but it doesn't tell you much about the job you might do. So all your first years of on-the-job training are the most important. So you probably, if you want to be an economist or an analyst or something like that, well, certainly an economist, learning it in that, you're going to learn a lot more in that world, I would think.
Yeah, for sure.
Yeah.
Hey, if you're enjoying this, please subscribe on whatever platform you're using. It helps us build a community. We want to educate investors, and this is what it's all about. When I look back my banking career, a lot of good traders and a lot of good risk managers come out of New Zealand.
Yeah.
So I don't know whether you've got a view on that, whether it's the Aussie and Kiwi currency is obviously highly correlated, but it just feels like there's a lot of experience comes out of New Zealand into financial markets.
I kind of do have a bit of a view about that one actually, and it's because when I ended up joining Bank of New Zealand, which is owned by NAB, into the trading room, and if you're a Kiwi, I mean, you're an interest rate trader, for example, or you got your own set of interest rates, which is kind of useful. I mean, because like New South Wales doesn't have interest rates different than Victoria. I mean, so it's a small country with its own set of markets. And I think the other thing is you learn a lot. I mean, like the exchange rate matters to the interest rate market. For sure. I always remember there's some funny things. So I'm just saying the markets are very linked. I have this memory when I was at the Reserve Bank of New Zealand, and we had a reserves function there. And I remember we were getting visited one time by a salesman remember Solomon Smith Barney, way back in the day?
Back in the US.
Because they had a reserves function, they bought treasuries, whatever. And so this sales guy turns up from New York. Yeah. And I remember him saying, he gave us all a talk about what he did, whatever. And he sold or covered the 2 to 5 year sector of the treasury curve. Yeah.
Gotcha. Yeah. Okay?
So that was it.
The mid curve.
Yeah. That was all he sold for 30 years of his life.
Gotcha.
Nothing more, less than 2 years, nothing more than 5 years. But if you were a Kiwi or an Aussie, like him in our markets, that's just not possible to do that.
True.
You have to cover exchange rates matters, commodity matters, interest rates matter. So I reckon that's my theory about why it actually Kiwi and Aussies actually do better.
Makes total sense, right? Yeah, you've got a multi-skill.
Yeah.
Another thing about those roles, you often, even if there is roles are split, you're often sitting next to them. You have the short end guy next to the long end guy or girl.
Yeah.
And so you kind of maybe learn by proximity as well. Whereas I guess if you're sitting on Wall Street in a US investment bank, they've probably got, 7 short end traders and the long end sitting somewhere else. So intuitively that makes sense.
Yeah, I'm convinced that is. Because you are right. Aussies and Kiwis do kind of outperform, in the global sphere.
Yeah.
Yeah.
Sort of like it's sort of jumping to a different topic, but when I was in the banking world, you'd have a certain job and you were on the rates desk or the FX desk.
Yeah.
The thing about working in a smaller business, like an iPartners business, you do get exposure to so many different things that grads in bigger organisations don't get. So it's jumping to a different, thought sort of process, but it makes total sense. If you've got exposure to a broader range of things, you're going to learn more.
Well, yeah, you become an all-rounder in a smaller business where you become a high specialist in a big one. Yeah.
Exactly. Now, talk about some people who've influenced you through your career. Have you got a couple?
People, goodness.
What's turned the dial?
I was very fortunate, I have to say. I think, reflecting back about people who, I found my way to places and then, had very good kind of role models of people who helped. I do think about when I first joined the Bank of New Zealand from the central bank. I was just these days I've got loads of research. I was just a single economist in a trading room, and I had a lot of people around me sort of just helping me. But I had the one person who ran that room at that time, Graham Liddell. He gave me a very simple. I always think it's give you someone a simple task and then let them go and do it. I remember turning up and Graham saying to me, your job is just to pick the next 25 basis point movement in the bank bill rate. That's your job.
Gotcha. Yeah.
So you synthesize a lot of things down, up or down, and that's your job. And then
smart,
and then it's up to you to work out how you go do that. But by setting clear kind of expectations.
It's actually interesting. So you had one task, but that task wasn't simple. There's a lot of factors that go into actually understanding whether it goes up or down.
Exactly.
So
I was fortunate a bit in someone else you've had on this podcast, Drew. Drew was one of my great bosses. Actually, I was fortunate to have many good bosses. Drew Bradford.
Yep.
And so he ran the markets business for NAB, and I ran the research group for him, but also worked in New York and ran the business for Drew in New York. And Drew was also he was great in terms of he would just set expectations and then you go do it. Give you rope. Rope's good. You can hang yourself on the rope, but also it means you can do the job. But not, I'm kind of glad I didn't have people looking over my shoulder the whole time. Double guessing me. So so there's a couple of people. Yeah.
And I can see with Drew, he would be a good boss because he seems intellectually curious, right? Like he's gone into the sort of the crypto sort of blockchain world. And that's like someone who's sort of interested in learning new things and letting people have a bit of a run.
Yeah, he was very good at that. He would say, I did almost felt like, you can say no to people. And sometimes when you work for someone who says no, that gives you a bit of a security, yeah?
Yeah.
Therefore I can't screw up in some ways. Yeah. But actually if someone says, yes, have a go, I'm going to open all these doors, actually that gives you that actually puts it back on you. Because actually all of a sudden, if I screw up here, then it's on me. Or if I'm successful, then it's also on me as well. So
you got permission to fail, right?
Yeah, you got exactly.
Which is the only way you can sort of make a difference. If you don't take risks or make decisions or try something different, you're not moving forward.
That's right.
Yeah,
I agree with that.
I'll take one of your points back when you were saying the 25 up, 25 down. When you start as an economist, how mathematical was it? Like how sort of, spreadsheet driven, or was it more qualitative or analysing, sort of information? So I know I think these days, it's very mathematical, spreadsheet driven, equation driven.
Data was hard to get when I started, and so actually I remember many hours plugging data into spreadsheets and stuff, Yep. But I think the way I would answer that question is certainly the way I arrived at it, you have to have some kind of process.
Yep.
But how you process information in every field, how do you process information? And the near term with the long term is quite uncertain. You've got lots of information. So how do you synthesize that down? So you can do it in a formal model. Some people build an econometric model and punch all the data into that, if you like. But just even having a model in your own head, which I'm sure you do in your business as well. I mean, we all have a sort of way that we process the information. So mine was definitely a bit of a quantitative one.
Gotcha.
I wasn't a real hardcore econometrician, but I definitely like seeing the numbers. And I'm quite visual as well. I like seeing a chart. Yeah.
Gotcha.
And having a base about some kind of fundamental understanding of how you think the world works, which you're always sort of fine tuning.
Gotcha.
And so that becomes a bit qualitative. And then there's a bit of qualitative stuff and then a bit of luck,
Yeah, bit of gut feel.
Bit of gut feel. Gut feel is actually pretty useful, actually, because gut feel is a test. I think it's your gut testing your head, actually.
Yeah.
It's asking your head a few questions.
It's also forcing you to make a decision.
Yeah.
The gut saying, you got to do something here. It's either right or left. Yeah.
And actually, I must say, I always used to think, to tell people who work for me, and when you a forecaster or whatever, an analyst, like you can say a lot of words, but actually the first thing you got to work out is it going up or is it going down? That's actually a pretty important thing. Yeah. So work that one out first. Yeah.
The amount of times you hear in a dealing room, what's going to happen today? It's going to go up, it's going to go down, it's going to do nothing. Of course, right?
It covers it all. Yeah.
There's sarcasm in it, but you do hear that a lot.
Yeah.
Do you have a favourite? I used to like, when I was working in rates, I used to like the US non-farm payrolls as an indicator. It was always, if that was, either way, it'd make a difference. Do you have a favourite indicator that you've watched over the years or group of indicators?
Oh, I think the big one, I mean, like the payrolls number is probably the most important piece of economic data in the world, as you know. I mean, because it tells you about, so I think if you go back, so in the end, if you're in the rates world or even the FX world, we're often thinking about what's the central bank going to do with their interest rate.
Yeah.
So if you think about it from that perspective, it all really comes down to inflation is probably the most important thing because most central banks target that primarily. Yeah. And then the labour market data, I think, is I mean, if you could get along with a couple of pieces of data, I mean, the inflation data and the labour market data will probably pretty much tell you what you need to know mostly. True. And a lot of other things just help feed into that, I think. I mean, so there's world is awash with data. I mean, but I think in the end, those two are the key. Yeah.
Gotcha. And that's because the labour data will potentially drive wage inflation, which drives real inflation. So it gives you a bit of colour on what the Reserve Bank might do. That sort of logic.
That's exactly right. And sometimes they sit in opposition. Well, they actually in theory do sit in opposition to each other. A really strong labour market, very low unemployment rate tends to push wages up, tends to push inflation up. So there's always that bit of a balance there. Yeah.
Gotcha. Very good. And now this spot may have overlaps because often people are involved in pivotal moments. Yeah. If you think across your career, maybe it was moving from New Zealand to London, doing your fancy economics degree that you did.
Wasn't that fancy?
What is a couple of pivotal moments in your career?
Actually, that was probably the most pivotal.
Gotcha.
I have to say, because you need a ticket to the game somehow. Like if you can see what the game is, you do need a ticket somehow. And it became clear to me, I mean, by a bit of stumbling around, to be honest, that if I had a decent economics degree, a master's degree, that was the only way I was going to get to where I wanted to be. So you just have to do a grind, a path to get there. So there was no way I was going to get there without it. Yeah. So that actually was, with hindsight now, the thing that triggered a whole lot of other things, if I hadn't had that in some ways. And then
just needed something on the CV, basically.
You needed something on the CV, and then the Reserve Bank wasn't going to employ someone with an agricultural degree. Yeah? I mean, they weren't going to do that. And then I had to say, when I left the Reserve Bank, I was fortunate. Some doors just kept opening up for me, and I just walked through the doors. Gotcha. But you knock hard, got to knock hard, really hard sometimes. But when they open up and you work hard and you walk through, and
that's a good point. Actually, how did you go from sort of the working for a Reserve Bank, effectively out, I suppose you'd say, to the private sector.
Yeah.
Into, you mentioned it was BNZ, was
BNZ,
it?
yeah. Yeah.
So that was just literally opportunity popped up. You done a reasonable job at the Reserve Bank and you stepped into a role. Is that about right? Or
pretty much, actually.
Yeah.
I was at the Reserve Bank where we were having a few more kids. Worked out we couldn't live on a central banker's salary.
Gotcha.
And then I need to do something.
Yeah.
And then opportunity arose. And it really was, because you said a lot of the people who you like economists you come across worked at a treasury or Reserve Bank or something. So I actually happened to be in that fortunate position where they were the only places people were hiring from. So I'd made myself into that position, and therefore BNZ needed someone, and so I made my way across.
And I guess there's probably people that had trodden the path. There was probably a few ex-reserve bankers sitting in the seats already.
Well, and it's a nice little bit for people. They go, the people who, if you're in the private sector in a commercial bank, you go, I think I might get a bit of juice here from someone who's been inside the central bank, and they're the dudes who move the rates. True. So there is a little bit of that, which is a bit of capital on your side there when you're sitting. It
makes complete sense. You've got a 1 year window where you've got the inside information.
Whether you really had it is another matter. I mean, but hey. Yeah.
Makes sense.
Yeah.
Hey guys, I hope you're enjoying this episode. If you want to learn more about alternative assets, there's a book here you can read, How You Grow Your Wealth with Alternative Assets. Now back to the episode. Now going to more general one, what drives you in business? What did you enjoy and what motivated you to turn up at work every day?
Oh, it was never hard to turn up to work, actually. I must say, I fell into financial markets. I just really loved markets, and I really loved the analytical economic kind of process. Actually, I was not everyone's fortunate to find what they really enjoy doing, and I know that was my first kind of love. I mean, I ended up running bigger teams. I mean, which was good as well. But I think I was never happier actually. Plowing through data and charts and making a call on the market,
It's actually a creative job in a way, right? You think about it, because a lot of jobs are you just got to turn up and do the same thing you did the day before. But I suppose in a way, when you're that sort of role, it's a bit more creative. You can go through the data, you can form a view on it, you get other data, get other information. So you do have a bit of a free rein.
And this, and the other thing about it is, maybe it's not really a paradox, but I mean. You're the beneficiary of when the world screws up in some way. Yeah. Like every calamity or catastrophe is actually really good for you as an analyst. Actually, it's actually they're the best moments. So they're a bit scary, like the financial crisis or the Asian crisis. Yeah. Honestly, that's where you kind of earn your stripes a little bit. I mean, and they're very fun, and there's new. I shouldn't say fun's probably not the right word, but new information, new challenges, new ways to think about things. Some of the old. Accepted wisdom gets upended sometimes, when we start ploughing into negative interest rates and stuff. So there's always these interesting challenges coming along that'll keep you interested. Yeah, for me. So I've never found it a hard thing to go to work. Yeah.
That's good.
Yeah.
You can tell fellow economists, I've just called them creative, sort of a creative career path. I don't know if a lot of people would say that, but you think about it, there's a lot going on in the background to come up when you form your views.
And everything's in play.
Yeah.
Politics, economics, markets, wars actually, and that are shifting oil prices around. So everything's in play,
You got to map it all together.
Yeah.
Yeah. When you think about your career, what has worked? Just think about one or two things you just go, I did that well and it worked.
One or two things.
Could be everything.
Well,
every step you took.
Yeah. Okay, one thing having a good process for how you think about information is really important. I think. I think some kind of framework is better than no framework. I mean, so I think it takes you a while to get to what that is. What is your own one? So that would be one thing. I mean, I really when you run teams, there's lots of ways you can think about running teams. But I learned pretty quickly that hiring is the most important thing you do as a manager. Yeah.
Sure.
That is depth, and you really want to have. It's a great thing with research people, but you really want to have. Well, it creates a challenge because you actually want to hire the the best, smartest, independent thinkers.
Yeah.
You know, you can.
Yeah.
Which gives you another problem when they're on board because everyone's sort of jostling for views and stuff like that. But you'd rather have that than the alternative, actually.
Yeah.
So I think, to me, it didn't take me long, but I definitely, it's an old saying, but you should hire people who are better than you, and it's absolutely true.
Sure.
I mean, and so that was probably, there's a couple of things. I don't know, yeah.
And help them develop, right? Because when they come in, they might be smart and on top of things and keen. Everyone needs direction.
Yeah, they do. Yeah. Research people are a bit different than I've found out when I looked after some sales and trading people. They're a bit different than research people, though. Because research people are like, not saying they're not driven by money, but they are, but less so. It's all around who gets to own the view, who gets to publicly come out and say things and stuff like that. So that's a different one. Whereas sales and trading people would love them dearly. I mean, but it was a bit more straightforward. Yeah,
they want to make money, do trades.
Pretty much, yeah.
You do learn that when you manage staff. Just everyone's different. There's different personalities, and they're driven by different things. Some it's ego.
That's very true.
Public perception. Others it's just I want to do a trade and make some money. It's just part of being a manager.
Yeah, and you're right. And it create a bit of certainly a mix of people makes it.
Yeah,
it's a real help. Yeah,
for sure. Now, what hasn't worked? A couple of things that went wrong. Can you point to something? As an economist, I'm sure you've made the wrong call. It's part of your job.
I've made so many wrong calls.
Is there anything sort of other than the wrong call?
Well, I'll give you one example of a wrong call because I thought you might ask me that question on the way in, and it was a formative period. So I was, 2 or 3 years into being at the Bank in New Zealand, and I remember going to see a big fund customer.
Yep.
The extent New Zealand has them, there was one of the bigger ones, and I was going to give a presentation, and we wandered through their office to get to the meeting room over there, and I saw a billboard they had, and as I was coming back from the meeting, I noticed that there was it was a BNZ research and 2 pieces of BNZ research pumped up on the board.
Yeah.
Both from me, but it was obviously for their office. It was a shame board. Yeah.
Oh, really?
One of them said, I can't remember now, but something like CPI comes out, no chance the RBNZ cuts rates.
Yeah.
2 days later, RBNZ cuts rates. Yeah.
Really?
Yeah. So you go, wow, that's kind of humbling. But takes you a bit back. But I think you've just got to. So that was a failure. I mean, you've got to learn to take that stuff on the chin and not shy away and still punch out your views, but be aware that you're gonna in that game you're gonna make a few mistakes. Yeah.
I've always had the view on that stuff is you've got to make the call. That's why it's a tough gig, right? It's very easy for someone to point fingers at someone who's made the call when they've made no call. Because we know everyone's an expert in hindsight. Yeah. And they had a thought in the back of their head. Unless they've written it down or told someone or actually publicly made the call, the opinion doesn't matter. So people making the decisions and going public with it, they're going to take the bullets.
Yeah.
But at least they're making the call. Someone's got to.
Well, and also at least I was on their board. They noticed.
At least it's good for your brand.
They noticed. Yeah. So, but it didn't feel like that at the time, I must admit.
Yeah.
But you were there.
It's not being noticed. It's a fair point.
So there's plenty of humbling things that you do. I mean, in this game, but you just got to, take the lesson, learn, move on. You're going to make plenty of mistakes. Yeah.
Totally agree.
Yeah.
You're speaking to some young kids, graduates now. What sort of 1 or 2 tips would you give them if they're, say, going into the financial markets or wanted to be economists?
What's the answer to that? Well, I mean, one thing is grades matter.
Yeah, gotcha.
They never used to matter as much when I was a bit younger. Maybe you were a bit younger as well. Yeah. But actually, grades matter.
Yeah, they do.
They really do matter. I mean, in terms of you want a good degree. Yeah. Yep. If you're going to spend your time doing it, get a good one. Yeah. And I think the other thing is, you kind of don't know what you don't know as well. I mean, when you're starting out and what you think might be where I want to be over here, but actually it may not be where you want to be. It may not even be where you're meant to be. I mean, and so I think just starting out and, getting into the game and looking around and being open, I mean, you would have seen plenty of examples of people who started in back offices and all of a sudden they're bond traders, and people have gone the other way, or just markets didn't work for them, whatever, it just wasn't their kind of gig, I mean, and so,
sure.
and so I would just say, have a very open mind, kind of work hard, and things generally work out.
I'd say the open mind thing's critical, right? Like, you got to be open to sort of different opportunities when they turn up. And I often say to people, just take the first job.
I agree. I actually agree.
Just take it.
Yeah.
Take it, learn some stuff, find out where your next path is, meet some people, network, and, you'll find your next role. And if you do that well, you can continue to progress your career. But you just got to take that first job.
And also, like you learn some skills. I mean, I can think of a couple of examples of people who work for me, who end up in pretty big front office roles, but who might have started, one of them I'm thinking particularly started in settlements. So like the deep plumbing,
for sure.
Deep plumbing of a bank, actually, when you make it to the front office, knowing that plumbing is actually really kind of helpful sometimes, actually. So they've taken a skill set along and they actually know, I've had a couple of examples of that, and
the plumbing thing's critical in that some of the best salespeople I've known have worked as traders, because traders have to understand the risk, hedging the deltas, whatever it is. And they go to sales, which is more relationship driven, but having that more technical knowledge before they went into sales is critical. So it does. And then coming out of operations, knowing how to front to back the bank works.
Yes.
When you're on the phone with a client, you say, well, operations team has to go through this process. That's what'll take some time. So it just gives you more of an open mind being in different divisions.
Yeah, and it's like super important if you're like a salesperson covering a client, and you can know the. It's not just doing this trade here. There's a whole bunch of other things that sit behind it.
Yeah, for sure. Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening.
Yeah.
Now, I was always going to ask you this question about your general views at the moment from a economist perspective.
Oh, okay. General views,
macro views. What are you thinking on the world and Australia?
I think the outlook looks pretty good, actually. Yeah. I mean, the way I often think about it is, I look for big kind of anomalies that's sitting around. Like, let's go back. To be honest, the difference between 2.5% and 2.6 or 2.7% GDP is neither here nor there, really, for most people. So I often think about, are there big imbalances that could derail and send us into recession? Because that's the big game changer for people if we go into recession and unemployment goes up a lot.
Yeah.
And the biggest imbalance we've had is inflation in the last 2 or 3 years. And kind of remarkably, really, it feels miraculous in a sense. If you look where we are today from where we were 3 years ago, everyone was saying we can't land it on the aircraft carrier. It's never happened before.
Yeah.
We're always going to recession.
Yeah.
But here we are.
That's pretty good.
Here we are. Inflation's down, unemployment's still low. People are still borrowing money. Business confidence and consumer confidence is up a little bit. I mean, it's not as fast as it was, but we might. I think the next, rates are coming down a bit.
For sure.
Probably won't rush down here, I don't think in Australia. But I would say, from where we were to where we are now, I mean, it's kind of, it feels pretty balanced actually.
Yeah.
I don't know. What's your sense?
Yeah, my sense. Everyone asked me about when rates are getting cut. I was more of a sitting on the February fence. Feels like it's kicked down the road a little bit as far as the first cut. I think a lot of the economists are more moving to May and later type frames. But I think they're definitely coming down, and they're coming down probably next year. Probably not as quick as what people expect.
I think that's right, actually. I mean, because the counterpoint, the counterpart of the economy being good is that rates don't come down as quickly. So the RBA's sort of got itself in a position, I think, where they chose deliberately not to take rates as high as other central banks, trying to preserve some employment gains. Yeah. I think that's still a legitimate choice. Other people might have done it differently. Inflation hasn't come down as quickly as I'd like, so they're just sort of stuck. Yeah. I mean, they're just stuck here. They definitely can't cut rates because inflation's still running at 3.5%.
For sure.
But you'd hope some point next year. I'm with you. I think it's a fair way away, actually. Yeah.
They've definitely got some firepower if they need to use it, right? Like if you've got to go into a rate cutting cycle, starting from where they are gives them sort of a bit of runway. If they needed to stimulate the economy if things fell off too far, right? So it gives them a bit of
Like if we fall into recession, which hasn't sort of happened yet,
Yeah.
I mean, they've got plenty of room. I was going to say the other thing that surprised me a bit over the last couple of years has been, I was sure, like 'cause all previous cycles, that's the other reason why I thought it would be hard to land it on the ship, the aircraft carrier, and that is because normally you end up with some kind of financial kind of collapse. When you lift rates so much, something usually goes pretty wrong in the financial system.
Yeah.
And there's been those pockets with those banks in the US, had those liability problems or duration problems. But other than that, there hasn't been
some mortgage affordability in Australia. For
there's a bit of that.
Certain people.
There's a bit
certain
of
groups.
But not a big kind of financial collapse, which is what really is debilitating. Some monstrous fund or bank falling over or whatever, it hasn't happened. So that makes you a bit confident as well.
Yeah, for sure. I mean, the post GFC, the capital that banks require to hold as well. I'm sure things like that make a difference in a distressed scenario as well.
Yeah,
if it was to occur, I guess what I'm getting at.
No, I agree.
Yeah.
Maybe they've done a good job for your business, yeah. Like, So the banks have all got loads of capital, loads of liquidity, probably pretty good asset books, I mean, so they've worked on the whole balance sheet since the financial crisis, which has created some opportunities for folks like you.
Yeah, for the private markets.
Private markets,
Banks don't want to do it. There's a lot of other entities that are happy to finance various things. Now, this one's philosophical.
Okay.
You mentioned your kids earlier, but sort of what legacy are you living and leaving?
Wow. I heard Mike Tyson say the other day he doesn't believe in legacies. Did you hear that story?
I actually didn't mind that, right? He just said, well, all I've got to effectively, all I need to impress is myself. Wasn't bad, right?
Yeah.
Yeah.
I mean, we've got, very happily married. We've got 3 wonderful kids. They're all kind of grown up now. I mean, and so I guess maybe that's the legacy.
That's the legacy.
Yeah, perhaps.
What you mentioned you played sport when you were younger. What sport you into? Was it rugby? In New Zealand,
from New Zealand,
right?
there's not many choices. I mean, but I played everything. But I played a lot of rugby. Hiking, tennis, skied a lot. All those types of things. Yeah. So as you and I were talking earlier, wore the body down, and I got a new hip 4 weeks ago.
Well, as I was saying, you've recovered amazingly well.
Yeah.
We're going to go into a couple of quick fire questions.
Oh, okay.
Now, your first job, as young as you want to go. When did it first start?
Paper run.
Yeah.
When I was probably 10. Yeah.
Can I ask how cold that would have been down where you lived?
I grew up in the family grew up in pretty much the coldest part of New Zealand, little town called Alexandria. It was freezing. So it was always, in the winter, definitely ice. We used to ice skate outside on dams.
That's a tough gig for a kid at 10.
Yeah. But you got paid a bit of money, so that was always important, yeah.
Pretty cool. Piece of advice for your younger self?
Probably be a bit more adventurous. There's, I don't have any or many regrets actually. I'm happy, but you probably should. When you're young, you should take a bit more risk. Yeah, I think that's probably the common answer. you don't often know. If you've got a good education and you're probably going to do okay. That statistically you're going to do okay, but it never quite feels like it at that time. But historically, if you're looking back, you probably should take a bit more risk. Yeah,
it's not uncommon to hear that one actually. We sort of often will overthink things in the moment, but maybe we've got to be taking a bit more of a punt at times.
Yeah,
take personal risk. Tips for driving long-term wealth.
I thought you might ask that one actually, but I don't have any good tips. But I tell you what, I'll give you my tip because I was listening to. Have you followed Anthony Scaramucci, the crypto guy? When he was Trump's.
Gotcha.
He was in Trump's cabinet for 11 days, famously. Anyway, but I was reading his. He had a thing in the Financial Times the other day where they did a long thing on him, and he said he talked about this book, which maybe you know, called "The Richest Man in Babylon," which I'd never heard of.
I've
actually.
heard of that book. Yeah,
I've never heard of actually, and it's and I got it and read it the other day actually, and it's just basic things. It's like written in the 20s.
Yeah.
Like it was written, like it's almost like a kind of Proverbs from the Bible or something rather, but written about a guy 4,000 years prior. Yeah. And it's just the things about never spend more, don't overspend.
Yeah.
Try and buy a house rather than rent it. Educate yourself.
Yeah.
save 10% of your money every year, regardless of how much you have. Yeah.
Yeah.
You know, so is it there? I mean, most things are pretty basic. You know, I mean,
sure.
and that kind of book proves it. I mean, like there's sort of age-old kind of basic principles for how you can go about your life. Yeah.
It's pretty much a slow and steady.
It is.
Right? When you think about it, you can't get rich quick.
And that was one of his other ones, actually. He had 7. One of them, don't put all your capital on a kind of a, on a risky bet. You know, I mean,
Yeah, gotcha. Very good. Agree. And biggest mistake you see people trying to create wealth?
Biggest mistake. Well, maybe it is that. I mean, there's probably two mistakes: not being involved at all, and then putting everything on the line. Yeah, I think that would be the 2 biggest mistakes you could make. Yeah.
One thing I always think about is sizing your bet, sizing your investment.
Yeah.
Because you will definitely get investments wrong.
Yes.
But just make sure that you can survive past getting one wrong, and so you sort of consistently placing your investments, taking into account you'll get some wrong.
You would have seen. I've seen it. You know, people I've known over the years. You know, who all of a sudden having to sell their family home and stuff. Yeah. I mean, that's it's very sad actually.
They size the bet wrong.
Yeah.
Yeah. I mean, actually, there's risk and return, and some people can tolerate risk. It's often about age as well. I feel like you can take more risk when you're younger than probably when you're a bit older, because you've got time to recover.
I'm pretty risk averse.
Yeah.
Generally, yeah. Maybe that's
Gotcha. Okay, we touched on this earlier. When you're not working, what do you get up to?
I enjoy doing things outdoors. You know, if I can, I'll be back to playing golf. Hopefully play tennis. Done plenty of walking and hiking over the years.
Gotcha.
Read quite a bit. So I'm still trying to study it. I try and push myself with that sort of stuff. Do plenty of, which I would recommend anyone. Like there's so much interesting stuff out there on EDX and Coursera. If you want to learn about blockchain or whatever the fanciest thing is right now, you can just go and this stuff is amazing. What's around now, just freely available to you.
It's amazing. Like some of the AI sort of driven aspects. I was looking at it yesterday around AI, around credit analysis, and it's pretty interesting stuff. Yeah, how you can kind of do a lot of pre-work using AI. You still got we've got to overlay a human on top. Right. If you wanted to sort of put some data in that spit out some ratios and a credit report and some basic analysis, there's software there that can do that for you. And you've still got to do the work. And it's still too early, but it's definitely come a long way. It's a bit like having AI as like a junior analyst.
I was going to say, it's like having a team of analysts or something doing the pre-work for you. It's sort
of like you got a grad. You got a grad that can do some of the grunt. You've still got to do everything. But it's not without value. So it'll be interesting how that moves forward the next few years.
Well, that's the next big productivity uplift. People hope. So
for sure.
Yeah.
Sure. Well, thanks for coming on.
Thanks, Travis.
Everyone listening, if you're interested in connecting with Peter, connect with him on LinkedIn. We'll include the link in the show notes. But thanks again. Appreciate it.
Appreciate it. Thanks for having me. Yeah.
Well done. Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening.